Now back to company news. Netcare says it's weathered tough conditions, including low growth and a difficult private medical healthcare environment where memberships remained stagnant. Despite this, revenue increased by 6.3%, translating into a near 12% rise in headline earnings per share. And joining me now as we recap on the year that was for Netcare is CEO Richard Friedland. Thank you so much for your time, Richard. Now we are seeing positive movements in your financial metrics. What were you most encouraged by in this reporting period?
Thank you very much, Sanatia. I think that we still managed to produce significant operating leverage despite a modest turnover growth or revenue growth. We were still able to improve upon margins, and we recovered after a very poor first half in terms of volumes. So overall, a very good operating performance. You'll see from our results, we returned to shareholders about 1.6 billion rands in terms of buybacks and dividends in this period without really even denting our debt, which shows just how good our cash conversion is. And so we were able to reward shareholders in terms of that. I suppose I'm most pleased by the fact that despite the difficult conditions, we were able to execute on our strategy. We've now digitized all of our clinical platforms, and we're now moving into the second phase of clinical efficiency, having done the operational efficiency through big data analytics. And we're very pleased about that.
Richard, you talk about an improvement in your margins. How strong are they looking? And actually, how strong is that momentum of an uptick that you are seeing?
Well, in truth, it's very hard to increase or even maintain margins in a market where we're seeing hyperinflationary increases. Electricity was extremely high this year, other utilities and other costs coming through. So it's a constant battle. I would say that our digitization strategy that's taken us 6 years to roll out is bearing fruit. We had forecast to save 120 million in both cost avoidance and cash costs, and we were able to actually save close on 190 million. And I think without that digitization initiative, which is set to continue, we would have been very exposed to margin pressure.
Richard, you also talk about seasonal inconsistencies that affected the first half. Just zoom in on the drivers there and really just the level of recovery that you saw in the second half.
Yeah, thank you for that. It really was where Easter fell, and school holidays, which if they fall in March, it affects our first half. If they fall in April, it affects our second half. And just to give you an idea, we were down 1.7% in patient days in our hospital division, and we recovered to a growth of 2.1% in our second half. So that's the extent of the delta or the swing in positive territory.
Yeah. I mean, also just besides the seasonal short-term drivers that we are seeing, what kind of trends or more longer-term trends are you seeing in terms of medical needs and demand that are filtering through to the numbers?
Well, there is still a very strong underlying demand given the burden of disease and an aging population. I do think the consumer is under pressure from a disposable income point of view, and that does play in the fact that many people are buying down in terms of medical aids to the lower network or lower cost network options. But people are holding on to their medical aid because in truth, unfortunately, there are a number of challenges within the public sector, and it's not offering a viable alternative for consumers at the moment.
Richard, you talk about your digitization strategy as well, and in terms of expenditure into these strategic initiatives for the future, at what stage of investment is Netcare in?
Well, we've basically completed the first phase, which was the most capex intense. We spent 320 million on OPEX and about 350 million on CAPEX. And the next phase, which is really about implementing this very large big data analytics platform, has a very small capital expenditure. So I would say we're over the rump of our strategic spend from a CAPEX point of view. There will be some OPEX into the future, but we're going to be absorbing that into our numbers.
Richard, also, I mean, I do note that, the whole healthcare industry has been involved in discussions about the NHI. And of course, that was signed into law before the elections, where it was just the ANC that was in power. But I mean, just looking at now the fact that the ANC is sharing power within the GNU. Are you encouraged by prospects in terms of, Netcare and also under the landscape of the NHI?
Well, I think what the NHI seeks to address is the inequity and the poor delivery of healthcare for all South Africans. And I think we all have to address that if we're going to build a sustainable society. But we do have fundamental issues, both legal and issues of substance, in terms of the sustainability of what's been promulgated. Now, BUSA has held a meeting with the president. The president has asked for a proposal to address the concerns of business. And that proposal has been submitted to the president, and we're awaiting a response. Separately, HASA also put forward a proposal in early September. And we believe that we could have a stark choice in front of us. We can take the low road, which means various parties will be taking on government and fighting this out in court for the next 5 to 10 years. And there are already 3 court cases before the court. Alternatively, the president can galvanize the private sector, its resources, its knowledge and experience, and its willingness to be able to find collective and collaborative solutions to healthcare in South Africa. And we believe the latter is the better choice. We can't afford to wait 5 or 10 years for solutions to healthcare in South Africa for those who have very poor access or no access at all. We need those solutions. We need them now. And the private sector is putting its hand up and saying it's ready to participate and collaborate.
Well, here's to hoping for more open conversations and negotiations there. Richard, thank you so much for your time. That was the CEO of Netcare, Richard Friedland.